once we recorded profit and loss and closed off all of the expenses to it, let's quickly post it. So all of these accounts will be reducing profit and loss. As you can see, it's on the debit side. And the change of $47,300 is due to all of these accounts. We will list them. So office salaries, 25, freight. I'll just abbreviate so it's a little bit faster. I hope you're doing the same. Okay, now we've got all of the entries done. Let's go and have a look what happens next. Then we're taking step 6. Profit and loss must be closed off to capital as profit or as loss. Let's have a look what happens here. We've got a lot of money sitting on the credit side, lots more than the amount of money sitting on the debit side, which means we have a situation of profit, which is great. So the missing entry is over here. And whatever the missing balance is will be transferred to capital. So we might as well prepare it. All right, to close off profit and loss to capital, profit and loss will be on the debit side. As we said, we're missing the entry here, and the net amount will go to capital. Let's quickly calculate how much we're talking about. The calculation will be 289,900 plus 2,000 plus 8,000. Take away all of this. So very quickly, that's what's it going to be. 289,900 plus 2,000 plus 8,000. That's to calculate the amount on the credit side. Take away what you have on the debit side. Okay, so that's the amount of capital. Let's quickly have a look. So minus 12,000 minus 2.5 minus 500. Yeah, that's better. That's the amount. You just have to be very careful here. Okay, so 252,600. Okay, so now we know how much money to put in the journal. And our capital should be 0. Ideally, you would add up all of the amounts here and all of the amounts here to work out the difference. If we have any, there should be none. So that's what we have on this side. And ideally, we should have exactly the same amount on this side. Okay, so double check. Fantastic. So it is 0. We've closed it up. That's always a good news when things are working out. Okay, next step is step 7. We need to take drawings and close off to capital. Let's have a look. Do we have drawings? I think we do. Let's check. We do have drawings. Okay, that's the drawings. Okay, so in order to close off drawings, normally it's a debit balance. We need to credit drawings and debit capital because it's a reduction of capital. So drawings 5,000 and capital 5,000. So in order to post it, well, we would have had opening drawings, so it would have been balance brought down of $5,000. That's straight from here. See, balance brought down. And now we're closing this, so we are posting this general journal 30th of June. Okay, we're closing to capital, $5,000. So drawings now are done. So it's 5,000 on both sides. It's all perfectly balanced. And let's have a look what happens in capital. Okay, we have 2 postings to capital. Okay, let's put them together. So first of all, capital on the credit side from profit and loss. From profit and loss of 252,600, and postings to capital from drawings, but on a debit side see capital on a debit side. So drawings, 5,000. Okay. So what we need to do now is to balance capital because, as you can see, we're pretty much done. So whatever capital is, that is the final figure for the year. All right, how do we balance it? Okay, we'll need to work out the missing amount over here. Now we're not closing that amount anywhere, so it will be a normal balance carried down amount as you've always done. Okay, the calculation will be 252,600 minus 5,000. Okay, so it will be 247,600. Okay, let's make that a little bit bigger so you can see. All right, now let's balance accounts on both sides. We will have that much over here, and we should have the same amount over here. Yep, we do, which is great. And then 1st of July 2005 is your balance brought down for capital, which is 247,600. Okay, so here we go. We've got our journals, closing journals done. The next step is to prepare financial statements. Let's start. Income statement. It's income statement of ABC, and I remember we write for income statement, it is done for the period, so for the year ended 30th of June 2004, 14 or 24, whatever you wish. I've got the template here already. We will use 3 columns, so that will be column 1, that's column 2, and that's column 3. Now you don't need to have this abbreviation, so I'll make them I don't know, so you know it's sort of kind of visible but not. All right, let's start. Revenue, sales. Okay, sales we'll have to put in column 3. Now remember, the idea is if I hide columns 1 and 2, you still should be able to see column 3 and make sense. So the amount of sales will be coming from trial balance as 380,000. Okay, let's hide some of the extra things that we don't need at the moment. Okay, that would be a bit better. All right, now we need to calculate cost of goods sold. Okay, now we need to calculate cost of goods sold. All right. In order to do this for periodic system, we'll have to do a little bit of a calculation. So we'll be opening stock, and opening stock in this example is that much, plus purchases, plus freight inwards. That's not the one, that's the one. Plus customs duty, which is that much. Okay, and that gives us cost of goods available for sale. So very quick calculation, add all of that up. Now remember, in accounting we show calculations by using the line. Okay, so when you draw the line like that, that means $92,200 is the sum of all of the above. Less closing stock. Well, we know closing stock from over here, so it's $2,100. Okay, now we can calculate gross profit and cost of goods sold. We'll have to show cost of goods sold in columns 3. So a person looking only at columns 3 can see sales, cost of goods sold, and gross profit. So how do we do it? Well, it will be $92,200 for cost of goods available for sale minus closing stock. All right, how do we show that it's a calculation? We'll have to do the line. So see how the line extends, and we write it on top of the line, which means $90,100 is the result of these calculations over here. Actually, these 2 calculations over here. Okay, gross profit now is calculated as sales, take away cost of goods sold. Okay, let's make it bold. Actually, it doesn't have to be. All right, next one. Looking at other revenue. So rent received was $2,000. $2,000 as commission received. And rent received is 8,000. Okay, well, actually we can do it without formulas, it's probably easier, yeah? 8,000. A commission received is 2,000. Okay, then we can calculate the total again. So just a reminder, the total is calculated as 8,000 plus 2,000, and the total is shown by using this long line. So you're putting the amount on top of the line to say that whatever is on the left is calculated together. Then total revenue will be gross profit plus other revenue. Okay, so that's total revenue. Perhaps it's not a bad idea to tick things off as we go, just to make sure that we've used all of the items from the trial balance. Okay, so in order to do that, let's just make it all the same. Okay, and we will start highlighting things as we go. So we've used custom duty, we've used that, we've done this. What else have we used? We've used this and we've used that. Okay, so let's make it some color. So we know what's left. Okay, we've also used this one. All right, moving on. Now let's look at operating expenses. Now there will be 3 levels of calculations. Let's start with freight. Freight to deliver things to customers is $800 and sales salaries 12. Now please note that I'm only taking selling and distribution type expenses. See, freight was selling and distribution, and sales salaries was also selling and distribution. Okay, we'll calculate subtotal very quickly, which is 800 plus 12,200. Now we're looking at telephone and insurance. Now, general and admin expenses. We had insurance of 2,000 and we had telephone, that's insurance, and we have telephone of 4,300. Okay, add them up. Okay. Moving on to F&B, or finance and borrowing expenses. So borrowing expenses and bad debts. Borrowing expenses were 2.5 and bad debt was 500. Add them all up. I keep reaching for the formula. All right. So now we can work out total operating expense. But before we do the total operating expense, let's just make sure that we've done all of the expenses. This one, done. Oh, look at this. We left out, or I left out, office salaries. So see how useful it is to tick things off on the list? Now that's general and admin, so we'll have to add general and admin over here. That's okay. Let's do that. So it will be office salaries 25. Okay, we'll have to change the subtotal over here. So plus 25. Okay. And now I can highlight this one as well. Well, that's much better. Okay. Now we can calculate total operating expenses. And that will be done by adding up total selling and distribution plus general and admin plus finance and borrowings. Okay. Note how I am writing this under the line because I have a separate heading for it. Okay, so it needs to make sense. And finally, net profit will be calculated as total revenue, take away total expense. All right, does this number look familiar? It'll be good if it does. Okay, time to unhide some of this information. Look at this. What was the balance transferred to capital from profit and loss? See, profit and loss how much money did we push into capital? The net profit. See net profit 252,600, and that's exactly what we have over here. Okay, I'll highlight it for you so you can see why we're doing and what we're doing. And also have a look at this gross profit and the final amount on trading account. So that's how we calculate gross profit, and that's how we calculate net profit.